The biggest thing now is when you do a pre-approval, or you go to a lender and you're looking to purchase that home, you really want to make sure you go to a credible lender. Ideally, someone who's local, that knows the market and knows what's going on in the market. What you're going to find is a lot of people out there are throwing numbers at people because that's what the people want to hear. You know, they see a great rate flashed on an ad somewhere, and so they're throwing these numbers at people, and they're not always realistic. A good mortgage broker or a good bank, what they're going to do is they're going to be realistic with the people, set expectations, and make sure that they're being upfront with them. For instance, when we do a pre-approval process, you're going to do the full application. Okay, you know, get all the personal information, asset information. You still have the four major components when you go for a loan. Basically, what the bank or the investor is going to look at is they're going to look at your income, what your income source is, whether you're a W-2 employee, 1099, self-employed, and depending on what you do, there's going to be different criteria what we're looking at to prove what your employment income is. Obviously, after that, we'll look at assets. Nowadays, assets aren't as important as they used to be. There's a lot of programs out there where you can get in with no reserves, or you can get in with 2 months reserves. So the asset equation, yeah, it weighs into it, but not as heavily as the income, employment, and obviously the credit. The credit is the big thing right now. With what's going on in the environment and the amount of foreclosures going on, it's kind of like everybody's heard about the new car insurance that's coming in, where it's going to reward the people with good driving history and penalize the people with a poor history. Pretty much the market we're in now is the people with good credit and who have made their payments on time, they're still in great shape. They can still get rates in the low 6s. It's going to be an easy process. Where the pendulum has changed is if you're not that A paper borrower, your options are a lot more limited. So these are the people I got to work with a lot more. A lot of times I may tell somebody, look, right now, yeah, we can get you in this house, but you're not going to like the rate, you're not going to like the program. Maybe we should wait 6 months, 12 months, work on getting a few things straightened out in your credit report, and get you to the point where you're a real strong candidate, and you're putting yourself in the best position moving forward.